Hey there, welcome to video number 20 of the overall course, but this will be video number 4 of module 2. And what we have here on the chart is the Alligator. Now the Alligator is a bit of a weird indicator. It uses chart shift and it uses moving averages as well, and it's using a smooth moving average. You can change these around to whatever value you want, really. Let's just mess around with these to see if these do come out a little bit better than the default one. Not really. Okay. Alright. I don't really use this indicator a lot because it's a little bit weird and a lot of false signals can come off of it. But the general rule of thumb is this. Okay. Now I hope for those of us that might be colorblind can actually see this. Let me just get my tool out because blue comes out like a purple. So this is okay, this here is a blue color, so if you're colorblind this might come out purple. Alright, red comes out green, so this is red here. So if you're colorblind this might come out like a green or a greeny gold or a darker red. Alright, and this one here is green, and I understand that on the end of the spectrum for Tritanope, green is blue, and Deuterianope and Protanope is basically a green, a darker green. Alright, so but the rule of thumb here basically is that you're looking for all of these three colored lines to cross over at the same time. Alright, or wait for all three of them to cross over at the same time. So for instance, you can see you need to really look at the blue one first and have these two lines here, the green and the red line, to be crossing over the blue line in order to warrant to go long, and vice versa the other way. The green and red lines need to be under the blue lines to warrant a short trade. Now the problem with this particular indicator, as I mentioned earlier, is that there's a good possibility to make a lot of losing trades here if you're not really looking at the right areas of this particular currency indicator. So I mean this is what they basically want you to do. Alright, when this green and then this red crosses the blue, you then go short, and then your short would be around about here. Alright, in this particular instance on the 4-hour time frame the market does come down, but there is absolutely no guarantee that it will. Here you can see where this line here crosses this one here, and then you have this line here that crosses this one there. That particular point, when the second one crosses, you go long. Alright, fair enough, it did go up higher. Then you get some areas like around about here. Here is a mark where this line comes under the blue one, and then this one also crosses the blue one as well. But the market didn't drop like it did in the other occasions, or the market didn't rise in the other occasions. It just went sideways. Alright, so how do you really get around it? Well, this indicator is probably for the real dead patient people. Alright, especially if you want to be successful at this particular indicator. And the way that I've worked it out is to filter out these possible areas where the market will actually just reverse. Alright, and it's what it is the distance. See how they cross over. These are perfect setups here. You see how all these lines start to straighten up before they start to go off and go up higher, and then it goes up, and then you see all the alligator jaws starting to close up and get very tight together, and then it jumps off again. Alright, well what we're looking for is basically, you see the distance between this candle and these lines. If it's touching the lines, then great. Alright, if it's touching the lines, then great, you can go long. Okay, here you can see here where the lines have already crossed together, and then eventually they started moving away. Well, you can see where the line starts to go sideways, and there's just a little gap between the first part of these candles to these lines. So that will be a good one to get in on as well. Alright, this one is different because not all the lines are crossing over together into a straight line like these are, and at least the green line is not touching the blue line here, where on this occasion it was, and over on this occasion down here at the bottom where it was as well. So we wouldn't even gone long on that one. We were gone long on this one and gone long on this one. Here is another area here. Now if you take a look now, you can see where the two lines have basically crossed each other, but it didn't really go in a straight line. That's what we're really looking for, is a straight line. Alright, so try not to confuse yourself. I mean, you can see straight away with this blue line is very, you know, you can tell it's going up, and then here you can tell it's starting to straighten up, right, before it goes back up again. Alright, so those are the kind of areas that you really need to look for. And when you see, like, see if I can find another area where you might get a little bit confused with, is like you might say, okay, well this is starting to straighten up here, this blue line is starting to straighten up here, and then we see these two crossovers. Well, if you take a look at the distance between the two crossovers, from that crossover to the candle and that crossover to the candle, it's too far apart. Alright, and we would expect this to go down and go short, alright, but it doesn't. Immediately after, or like a few hours afterwards, it goes back up again. Alright, so we need to stay away from any time where the candles are too far away from the crossovers. You basically want the crossovers to appear right at the point where the candles touch. Alright, let's see if we can find any more areas. Alright, okay, here's a good example. We can see the green line is coming down, and it's also crossed the blue, and then later we see the red line come down and it's crossing the blue as well. And the distance between these are very short, they're not very far apart. Okay, and then the market drops. Alright, and then you can see this, for this example, you can see where the green line crosses over this blue line, which is what we want, and then we're looking for the second one, we're looking for this red line to cross over the blue line as well. Alright, that's our alert. And then you take a look at the difference between where they crossed over, so how far away the candles start. Alright, it's a big gap. It's like two little grids there. Alright, and then look what happens. The market goes sideways. There isn't an immediate move on the way up or immediate move on the way down like there was here. Here is your first crossover. Here is your second crossover. Take a look at the distance between this crossover and the candlesticks where they start. Well, this one is actually touching it, which is good, and then this one is actually just like maybe 3/4 of one of these square grids away, and that's still okay. And then more or less, when I say immediately, I say like within a few bars, and you can see within a few bars, boom, down it comes. As where this one, when it crossed over here and when it crossed over here, there was quite a few bars before it did decide to go up higher to test a new resistance level. Alright, so I wouldn't really go for these kind of types over here. I would probably go for these ones like over here, like I just mentioned. Alright, this one took me a long time to work out because I found that some people on forums were ranting and raving about the Alligator and how profitable it could be and this, that and the other, and I just couldn't work it out until one time I took a break and decided that this was the true way to trade this particular currency indicator. Alright, here we can see again where the green line crosses over the blue to the upside and the red line crosses over this blue line to the upside. Alright, and then the currency prices start around about here at the point at where they crossed over, and that's way too far. And then look what's happened, it's basically just gone sideways. There wasn't really any real immediate profits that we could have taken. Alright, again with this one and this one, it's too far away. Alright, we want something to be about like a half of a grid square or 3/4 of a grid square, ideally. Like this one kind of qualifies, but this red one is too far away, so we don't do that trade. Here is another one here where the red and the blue cross over and they're quite close together. It doesn't immediately drop straight away, but the range is quite large, so we might have actually gained a fair few pips out of this one. Here is the red line here, and then we'll get in on the next bar, and we could have got around about 60 pips off of that. Here's another nice one. Here we got another red line coming down under the blue, and the red line coming under the blue, green and red line coming under the blue. Take a look at where they crossed over and how far away it is from the candle. Well, that's quite close. Now take a look at this one and how far away it is from this one. Well, that's around about 3/4 of a grid, almost a full grid. So that would work. All right. And now, and you take profits. Where would you sit your take profits? Well, it's a good question. I mean, you could go with a basic number like 20, 30 pips, depending on your strategy. I mean, you could use like 4-hour time frames and wait for like a signal to come in and just get 20 pips and be done with it. All right, and just do that for the whole entire year, and you'll make a fair amount of money. All right, you probably won't get as many trades in like one per day on a 4-hour time frame just using this particular strategy, but you'd probably get around about 1 to 2 a week. All right, so 40 pips a week times 40 weeks is 2,600 pips. So that's $1 per pip. That's 2,600 bucks. All right. So it works over the end of the year, and that's how you should really focus your trading. All right, here's another one. All right, the market does drop, but let's take a look. The distance on this one is a little bit too shabby. Alright, but this one here is a little bit okay. It's more or less within our line. So I wouldn't really do that. I'll probably use some other technical support analysis to give me an idea whether I should go short on that or not. Here is another one. Now this red line, again, is a little bit too much away for me, for my liking, so I'd ignore that. Again, I'd ignore this one and this one. It's too far away. But yeah, so that's basically how we do it. Alright, so play around with that for a couple of days. Alright, and then I will see you in the next video. Alright, bye for now.